Welcome to the Market Report with Cointelegraph. We are back at it again and have some juicy topics to be diving headfirst into this week. We have a special guest today, Charlie Burton from Easy Trader. You are not going to want to miss our chat with him. And I am your host, Benton. We're joined by our resident experts, Jordan Finiseth and Marcel Peckman. Jordan uses his background in psychology and human behavior to spot emerging trends in the crypto markets. Marcel Peckman applies his 17 years of experience trading derivatives, options, and futures to the crypto derivatives markets. What is up, fellas? How are we doing today? What are your thoughts about the market and what's going on so far this week?
Oh, I'm excited, man.
Yeah,
because
$48,000.
Go ahead, Marcel.
I'm happy. I'm comfortable. I think Ethereum is on the way to 5,000, and I think Bitcoin, as soon as the ETF gets approved, we're going to launch above $100,000 easily over the next 8-9 months maximum. What do you think?
Yeah, I think we're headed for some upward action here in the market, though. I am looking, though. This is some investment advice, but I'm looking to cash out and lock in some profits here in the next couple of months because this is getting a little hot and heavy.
Things started out around 45K this week for Bitcoin. Now we are pushing up to that 48 mark. And will we see 50K? No one knows. We'll find out. We're going to start to dive into some of our biggest headlines this week. So make sure you stay tuned here for our markets news segment where you don't want to miss some of the hottest topics that we're going to be diving into. We'll also have our expert segments with Marcel and Jordan. They'll be diving into some particulars today about Ethereum and DeFi. And of course, we have our special guest today, Charlie Burton, that we're going to be speaking to. And don't forget, save some of your questions for the end of our show to interact with us and ask us anything you want. But before we dive into some of our biggest market news for this week, make sure that you like and subscribe our YouTube channel. We are here on Thursdays, 12 p.m., talking to you about the hottest news of the week in the crypto markets. So let's jump right into our market news this week. Happy anniversary, Bitcoin. It has been just over a year that Bitcoin's price has been above 10K. I can't believe it. We're here. We're above 10K. It's a really nice feeling to have this stability in the markets. So that's an exciting historic landmark for Bitcoin. But let's get into more about what's going on with Bitcoin currently. We see it at 40K, 48K right now. And we've talked about this 50K level for weeks and weeks. It's been yet another interesting move to see this price swing. And is there momentum building up? And Marcel, what are your thoughts about what's going on right now with Bitcoin?
Okay, Benton. So first of all, I don't analyze Bitcoin's price by being 43,000 or 48,000. I like to monitor and compare it to the gold, to silver, to Apple, to the global assets. So we're at $900 billion, so nearly $1 trillion. So it's a mark that it's going to force every mutual fund investor or mutual fund manager to think about it as an allocation, maybe 1%, maybe 0.5%. But after it's been trading near the 1 trillion mark for so much long, it forces those investors to rethink their strategy. Before they were saying, oh, it's going to die, blockchain, not Bitcoin. But after 2 years, 3 years, and you see that it's only going up, you have to rethink your strategy.
Yeah, I think El Salvador's announcement, like in the last couple of weeks, has really kind of changed the game. I don't think that they're just going to let it take off and reach new highs anytime soon. But I think in the long-term perspective, Bitcoin's going to go up, and as Marcel said, hedge funds are going to really start eyeing it a little differently, and definitely at least allocating a small percentage to it, just because you're kind of doing a disservice to your clients at this point if you don't.
Yeah, but
go ahead, Marcel.
El Salvador was a flop. The day that El Salvador launched was the day that Bitcoin started to come down. So I don't know if that's the
why do you think that just happened by coincidence, or like there's some bigger players in the game trying to like, no, this is a bad thing? I think that like long term they wanted to do this. They just didn't want El Salvador to be the one to announce it and do it first. That's just my opinion, though.
Yeah, and so one of the things that from this article in particular that was spoken about was contributor Michael Vandepop points out that the final hurdle before going to this next all-time high that we've talked about is this 50K mark. We've talked about this before, but what is it going to take for us to finally break through this 50K resistance level? Marcel, what do you think?
I'm still very bullish on the ETF case, the exchange traded fund, which already exists in Canada, for example, but it's not allowed in Brazil. United States. And we also have it here in Brazil. Over R$1 billion have been invested on the ETF. It's like a normal stock that trades on regular brokers, but it contains shares of Bitcoins behind. So I think that's what's going to drive us to the next level, because most of the more conservative investments fund cannot go into Bitcoin right now, not even the GBTC, the grayscale instruments.
Yeah, I probably agree with that. Like, it's going to really take 50K. It's not too far. I don't think it'd take too much to get there. But to sustain a big move above 50K and push higher to new highs, we're definitely going to need more of like the general public coming into this space, and that's probably not going to happen until Bitcoin ETF comes on. I mean, they got access to like PayPal and all these other services, but they're still not. I don't know. I still don't think they really know what crypto is all about and what's going on. So it's going to take the regulators regulating for some reason for them to come in. I don't know. They're not like all of us.
I do have a little bit of bearish sentiment if we can't break through this 50K price level in the next month or two. I do feel like regulators are super concerned about how to tax this asset class and how to regulate it inside the boundaries, especially here in the United States. And I think that regulators are it's going to be ultimately a good thing. But at first, we're going to see kind of a 2 steps backwards, 3 steps forward situation where we get to these higher levels. Like Marcel said, that ETF, I think, is going to be critical. You're starting to see other countries like Panama start to talk about Bitcoin. I think that the El Salvador was the first domino where other countries will start to fall in line with that. But that's going to take time. And I think we were talking pre-show is there's going to be a bear market at some point. Who knows when that will be? But I think before we start seeing, these 100K levels that everyone loves to talk about, there's going to be some retracements, back down lower to 40K. What are your thoughts, Jordan?
Also, you got to be careful. Like, Bitcoin ain't ready for the big time. You can't have multiple countries doing a lot of their transactions on Bitcoin. Do you remember what that was like back in 2017? Like, like confirmation. Like, the Lightning Network still ain't up to snuff. You ain't like, we can't, like, it's gonna take these other chains at this point to support Bitcoin, because Bitcoin can't handle the load that they're trying to put on it if multiple countries come online. So that will tank the market sentiment quick. Like, yeah.
So are you a Bitcoin cash maxi? Is that what I'm hearing?
It all depends.
All right. In all seriousness, though, guys, I do want to kind of shift us over to some other news in the markets this week. We saw Solana. We talked about Solana with Sam Bankman-Fried last week. There was some critical stuff that happened on that blockchain, along with Arbitrum and Ethereum. So Solana was knocked offline along with Arbitrum, while Ethereum network evaded a little bit of an attack. So what are your guys' thoughts about this? Can this impact the ultimate price of those chains' assets? And what are your future outlooks for some of these hotter topic blockchains? Marcel, we'll start with you first.
Okay. First of all, if you rewind the tape a little bit, on September 14, there was a report from CoinShares, and they monitor those institutional investors' flow on crypto funds. And the biggest inflow over the past week, guess what? Was Solana. So institutional investors were placing $50 million worth in Solana exchange-traded funds. So on the very next day, we have this incident of the network going offline for 8 hours, and the validators having to reboot or regain consensus or whatever. So it shows us that even the professional traders that supposedly understand what's going on, did some due diligence and whatever, they don't understand a thing. They don't even understand why Solana crashed. So imagine for the retail or for us that we are not programmers, we're not coders, we're not security experts, IT experts. So it's a new world, and it's very hard to say, oh, this project is worth 100 billion, this project is worth 2 trillion. It's too early to say that, to say any of that. So it's a risky investment.
Yeah, to me, a lot of these are like developments that happen, and they're part of the growing pains of these networks. Tell me which network hasn't shut down. Litecoin's like one of the only that hasn't shut down. Bitcoin even shut down. Like every network has been put through the ringer when it comes to like, oh, you think you're ready for the big game? Well, let's maximize it. Let's let the Bitcoin maxi hackers that only want Bitcoin to survive get in there and try and take down every major network so that only Bitcoin survives. I don't know, like.
So Danilo, can you pull up the article real quick? I do want to kind of highlight and dive a little bit more into the weeds here. And so for those of you who weren't familiar with actually what happened with Solana, 6 hours after announcing an incident, Solana status explained that a large increase in transaction load of 400,000 per second had overwhelmed the network. So it created a denial of service and caused the network to start forking. So like, is this a big issue when it comes to some of these like layer 2 options with Ethereum? When it comes to the Arbitrum, now I know Solana is its own blockchain, but is this going to be a frequent issue where a lot of these chains are going to encounter this high input transaction stuff moving forward? Jordan, what are your thoughts?
Yeah, I think it is. I think that's part of this game. Like this game is full of hackers and crackers that are just trying to get at any kind of money or influence the market any kind of way. And when you're reading that, I'm like, oh man, I actually got a little bit more. I'm not respect this. I don't know if that's the right word, but like, for Cardano and like their slow process of rolling it out and not throwing a bunch of DeFi protocols on top of the chain as millions of dollars get put in, and then so it just shuts down. Like they're taking a more methodical approach to it, and I can appreciate that a little bit more now, seeing this happen with every major chain once it starts getting traction. So, yeah.
Marcel, any thoughts on this one?
Well, I think it's the pain of growth. Bitcoin in the past also experienced some bugs and some errors, and they fix. It's a software. It's upgradable. So, but it shocks me that networks such as Cardano and some of the other ones that still don't have a final good working product are trading at valuations above $20 billion. It shocks me.
And speaking of Cardano, not sure if you all saw this. I noticed we like to bring up this particular chain and project. There was a little bit of sell the news, it appears, this week. So ADA experienced a 10% price drop following Cardano's long-awaited smart contract rollout. Is this a situation where most people were selling this news and buying the rumor of it actually being released? And then my second follow-up question to that is that a strategy and tactic that you guys like to use when you're doing a lot of your trading? Jordan, we'll start out with you first.
I'm not a trader. I use the news. Maybe I pay attention to that if I'm looking to scale into a project, but like scale in and out, jump out, trade it or buy the rumor, sell the news. That's not really my game. That's not what I do. But yeah, I think, just lost my train of thought. Yeah, I don't trade in and out. The taxes.
He's lying. He trades because he's losing money. So he's saying, I'm not trading. It's because he lost money recently.
If I lose money, it's because the whole
Marcel.
Okay, the other day I saw what you were saying that I just saw a meme and it had like this person, their head was barely above water. It's like crypto traders when they're down 10%, and then it looks under the water and they're like up 900%. Again,
right.
Like, yeah, it's gone down 10%, and I bought it at 3 cents. So what? I'm not FOMOing out of it. FOMOing into it. I'm waiting for it to get to like $10, which it might eventually do, and then I'll think about taking some profits. And
Marcel, are you buying the rumor and selling the news if you're doing that with some of your trades?
Selling the news is something that I usually do. Whenever I see that's too much hype around the project and it starts to go down, it's the first leg of 10%, then there's a second leg minus 20%. Then I think it's time to short an altcoin. But personally, I don't like to buy the hype because most of the projects have a lot of promises, but in the end, they don't deliver, or as Cardano, it's very limited functions of their smart contracts. So it's not a direct competitor to Ethereum right now. So that might have disappointed some investors. So I rather wait if the news doesn't confirm, so I'll short the altcoin.
Very interesting. I am a believer in buying rumors and selling news. I hate to use this example, but we saw it with Dogecoin and Elon Musk. Everyone was buying that rumor. He's going on SNL. Everyone's going to buy more Dogecoin. What happened? Dogecoin dumped. So that news, whether it was good or bad, typically is reflected in a lot of people. Smart investors, I think, do kind of sell the news and buy the rumor in advance. So all things considered, the markets appear to have a little bit of momentum. I still feel like heading into Q3 and Q4, there could be a little bit of patches of bearishness, but we will see these setbacks inside the DeFi world are common. I think, especially as Jordan mentioned, these evolutions of the space will continue, and those projects in space will continue to innovate and forge ahead. So if you haven't liked and subscribed, please do so on our Cointelegraph channel. And we are going to roll this right into our expert segment with Marcel Peckman. He's going to be diving into Ethereum this week. Let's go ahead and get started.
Okay, guys, so we're going to do something a little bit different this week. I want to talk about Ethereum, but I want to talk about what happened since the ICO, since the Ethereum was launched back in 2015, 2016. So it's important for us to get this perspective to understand why I think that Ethereum 2.0 will disappoint most investors. Okay, so first of all, the Ethereum fans currently say that Ethereum now is sound money because it's becoming deflationary. So back then when it was launched, Ethereum guys just said, no, Ethereum is not money. It's just a token that you use for the ecosystem to support and security and blah, blah, blah. And then they change the dynamics over time. And now that they say that, yeah, Ethereum is money, it's scarce, it's deflationary, so it's going to surpass Bitcoin and blah, blah. So narratives have been changing, and will keep changing. So first of all, the Ethereum ICO, so the initial coin offer, was held in 2014. So they received Bitcoin for that, okay? So the investor who wanted to buy Ethereum had to pay in Bitcoins. So the money at the time, the money value of the Bitcoin paid at the ICO was $18 million, which is not much, okay? But keep in mind that the ICO was coordinated by a company, ETH Swiss, which was then renamed to Ethereum Foundation. So this company, ETH Swiss, had pre-investors, the venture capitalists. So the company already had money to hire developers, to hire a marketing team or whatever. So it's very different from bootstrap projects such as Monero, such as Bitcoin. It was really well planned and executed. And if you think it through, they pre-mined, I think, 72 million coins at the time. 60 million was given to the ICO investors, and 12 million was handed out to those pre-seed investors, to Vitalik and his friends, to developers. So from the start, they had a lot of coins themselves, okay? So what, for example, Joe Lubin, which was one of these pre-investors, he created Consensus, which is a huge company on the Ethereum ecosystem.
I guess my question is, like, when these big like backers or foundations or companies get involved with chains and the development of chains, does that resemble more of a company that's working like in a particular ecosystem, or is it like, hey, we're just a couple different crypto projects all working on the same goal towards the same mission? What are your thoughts on that?
Good question, Benton. In Ethereum case, my view, it's a company. It's always been a company. They hire developers. They hire a marketing team. They hired a team to launch the ICO. They had professionally done that. And Joe Lubin created Consensus, which is the owner and creator of MetaMask wallet, which is the biggest DeFi and Web 3.0 wallet using for Ethereum. Consensus is also the owner of Infura. Infura provides data center solutions for the decentralized applications, so API, connection, database, They run the nodes for most of these decentralized applications. So Ethereum would not survive, or would not be that big as it is today without consensus. So it really resembles much more like a tech company than of a bootstrap ICO, small ICO project. So the $18 million, maybe it was half of the total money that was put into the project. You see?
Are you saying that this is a bad thing, Marcel?
Yeah, because in cryptocurrency, you need decentralization. We've seen that over time. For example, in Ethereum, the blocks, the gas limit, which is basically equivalent to the block size in Bitcoin, has changed many times over the years. In 2015, it was increased 2 times. In 2016, the next year, it was changed 6 times, up and down. And who makes these decisions? The users? No. The consensus guys, the developers, the Vitalik and friends, they hold a conference call. You can watch it on YouTube. They have recordings of those calls. And they decide, well, we're going to increase the block size limit. Well, we're going to reduce what we pay to the miners. It's just a group of like 50 people. It's a corporation. So maybe some of those discussions and results are good for the holders and the users. And some of them might be dangerous. For example, moving to the proof of stake. Because unlike Bitcoin, you cannot fork Ethereum, because all of those smart contracts and decentralized applications are connected to the blockchain. So
do you think Ethereum would have gotten as big without having that foundation? Like, because Bitcoin is the only decentralized coin out there that's huge. Look at all the other Litecoin, Monero. These are all they're going down. They're losing favor with the crowd because they don't have this backing, this organization helping to direct their development, in my opinion. Like a lot of the Bitcoin's the only one, and even Bitcoin, they got Blockstream, they got Coinbase, and all these people. There's developers, there's companies out there that are backing Bitcoin's development too. They just might not be so upfront about it. So it's not. I think that when I've ever tried to see like organic things arise in the world, when people there's no rule, no central authority kind of figure, it kind of evolves into this hodgepodge of craziness, because humans, we're all different and we can't agree on anything. So sometimes you need this central thing. I know we like decentralization, but you need a central developing party to kind of direct the evolution of the platform, which is what happens with Ethereum. And I think that's why it's gotten so big.
Yeah, first of all, answering your question, no, I don't think Ethereum would have reached the size that it has today without consensus, without the foundation, wherever. But I think that those important governance discussions should be done differently, maybe involving the miners, maybe involving the holders, maybe involving the exchange. I don't know, but it's too much centralized. This decentralization is not an end goal per se. Why Bitcoin aims for decentralization? To avoid that a single company or a single group make decisions that are bad for the others. And that does not happen in Ethereum. If these guys decide something that, okay, we're going to migrate to proof of stake, okay, we're going to we're going to increase the block size, they don't care what the small holder or what the users of the decentralized applications think, because it's run by a company. So I think, okay, decentralization is a myth. It never exists completely. And even if it existed, it would be, as you said, crazy, because everybody will be doing different things. But too much centralization ends up like having Solana with the CEO and the network offline for 8 hours.
So you think would you be okay with Ethereum getting like governance capabilities, the token, like governance abilities for ETH token? That's what you want, kind of a thing?
Yeah. The foundation should be absent from voting and give the power to the real users of the decentralized applications, the guys who have their tokens listed on Ethereum, the NFT industry or whatever. The users should be deciding where the network should go, my view.
I might even argue that Bitcoin is truly the most decentralized blockchain when it comes to the way that it's governed, the way that it's modeled. And so like, I'm curious to hear, Marcel, is Bitcoin truly the most decentralized blockchain?
I don't know. I think like Monero, for example, is decentralized in my view. Dogecoin is decentralized, but it doesn't really have activity going on. But as I said, the decentralization itself, it's not that relevant. The relevant is who makes the decisions. And if the users are opposed to this change, what can they do? Can they fork the chain and create their own solution? Or are they stuck because of DeFi contracts or whatever? In Ethereum, they are hostages. So if you don't like the gas fees are too high, you have to find your own second layer solution or whatever, because you can't really fork Ethereum. So it's like some monarchy or authority, and I don't think that goes well with crypto.
Very, very interesting insights there on the Ethereum blockchain today and diving into some of those aspects. I know Jordan is going to be touching on some more DeFi stuff today. So let's jump over to Jordan's expert segment and let's go right in.
All right, yeah, so we're going to kind of keep on the Ethereum theme. Go ahead, Daniil, go ahead and share my screen for me real quick. Or I can do, yeah, so we've been seeing this theme lately of projects or like layer 1 solutions or layer 2 solutions. Like recently this past week, it was Arbitrum launch, where you see a bunch of funds kind of go across the bridge and enter this new ecosystem, whether or not they're trying to get involved in airdrops on the platform or just kind of bootstrap liquidity on these new networks. I know previous week we've seen Phantom launch an incentive program. We've seen Avalanche launch like a Avalanche Rush program, which was like $300 million or $180 million to try and incentivize people to come into their DeFi ecosystem. And this is really like we've been seeing the rise of lots of different platforms. Again, like I mentioned before, Arbitrum, you got Polygon, that's another layer 2 solution. So let me first, Arbitrum, it's a layer 2 solution. So on Ethereum, there's all these transactions happening, and when more transactions happen, the network gets congested, and that slows it down and ups the fee cost. With these layer 2 solutions like a rollup, Arbitrum, or Optimism, not all the data that is included in every transaction is what's included when it gets uploaded to the blockchain. So on Arbitrum, there might be transactions happening, and every once in a while, one party will kind of broadcast all the the metadata for that, not the all the data, just the needed data to the Ethereum blockchain that gets recorded. So a lot of the computation happens off chain, which is why it allows for a faster environment and a lower fee. So a lot of these projects have been launching. Arbitrum was the most recent one. We see like $1.5 billion cross the bridge and go over to Arbitrum. If you look at data from DeFi Llama here, you can see that about February, this is the Ethereum dominance as far as total value locked on the chain. So if it's DeFi chain or people are putting money in and locking in contracts or something, total value locked on a chain, Ethereum was dominating it. About February, it was 97%. And ever since then, it's been slowly declining. You can see as new chains launch, other projects come out. So there's liquidity leaving Ethereum, and I don't know if this is a long-term, if it's trend going to continue or what's going to go on with this, but a lot of it is people joining other networks to try and get involved with that, enjoying the lower fees. Again, we see here Solana is now the 3rd ranked as far as total volume locked. Terra is an up-and-coming one that is more focused on stablecoins and a payment rail. So like a lot of these newer tokens are solving older problems, even whether it's the exchange of value, DeFi and all these things, but they do it with smart contract capabilities that kind of improve upon older systems, even like the Bitcoin, Litecoin, Monero, these different platforms that are smart contract capable platforms. But overall, there's this migration of value away from Ethereum. Here you can see how much value has transferred over to the Arbitrum there, 2.5 now. Yeah.
Are those layer 2 solutions competitors to Ethereum, or are they were meant to solve the problem of scalability? I don't understand, because they have their own tokens.
Yeah, and this is where for me it gets really kind of muddy. Like why? Like So Ethereum is going to be the world computer. But right now, it needs layer 2 solutions to kind of help as a crutch almost, to kind of help to make sure the network don't crash. Are they competitors? Are not? They are, but they're helpers too. At the beginning of this whole debate of Ethereum killers versus Ethereum helpers, I know Phantom actually launched earlier. They're like, we're not an Ethereum killer, we're an Ethereum helper. They are, but in my opinion, they are competitors. But like with Arbitrum, there's not currently a token, but a lot of people are crossing the bridge because they think they're going to get airdropped the token. Same thing with Optimism. I'm not sure if there's an OPT token, but if you look at another layer 2 solution, Polygon, that definitely has a token, Matic. And the main difference I see is that when you use Matic, you're on the Ethereum network, but you transact in Matic token, Polygon. For Arbitrum, Optimism, and all these other ones, you use Ethereum to transact. So as we head forward, if Ethereum keeps increasing in price, the staking contract comes in and it does get deflationary, there's going to be less likelihood for people to want to spend their Ethereum, in my opinion, on doing transactions. Go ahead, Benton.
Now, Jordan, is it when you're like transacting on some of these networks that do use ETH, is that a wrapped version of ETH or is that the actual asset ETH?
ETH. No, you're trying like you. It's okay. You have to cross your ETH across the Arbitrum bridge. So you deposit ETH on the Arbitrum layer, but you're using ETH. Like it's the ETH that you deposited. Yeah. Like so, yeah, you're using. I'm not sure. I need to look more into that. If it's wrapped version on, if it's technically wrapped since it's on the different layer, I need to look more into that part of it. But you're still spending your ETH. And so now we got all these other networks launching: Solana, Avalanche, Phantom, other layer 2 solutions, Optimism.
Do you envision there being a point where like that market share that like Ethereum has is like slowly diminished, and then there's so many other chains that are solving all these different various problems that's what eventually what it could look like?
Yeah, I think it's probably going to look the same as the Bitcoin dominance chart, how it slowly decreased over time. Like we're going to have that decrease, but we're also going to have more money coming into the whole ecosystem. So the whole total value lock. So even though it has a lower percentage, it might have a higher amount of value locked on it than did previously, just because it's currently the dominant platform. Most of the protocols and DeFi protocols, NFTs are built on top of Ethereum. And I think it's going to take a while for them to bridge across, because people are still waiting like, no, Ethereum 2.0 is coming. It's going to save us all. And I'm like, don't bet on that one. Like, I don't know. It just seems like all these layer 2s and stuff are making the process more complicated, whereas you have layer 1 solutions that can handle it without layer 2. And long term, ETH cannot operate with layer 1s and layer 2s to be the chosen one. Like the chosen one that will host something will probably be a layer 1 that's capable of actually handling the throughput that the world needs it to. And I don't think that's been developed.
Cut to the chase. Is Ethereum 2.0 going to happen? Yes or no? Or over the next 12 months? Yes or no?
The time limit. Just like smart contracts on Cardano. ETH2 is coming. When? Before we're dead. How about that?
That's fair. ETH 2.0 going to save the world. Very, very hot takes there with, the Ethereum layer 1s, layer 2s. What's going to happen? Who knows? I think we know where Jordan stands, though. So if you haven't liked and subscribed, make sure you do so. Cointelegraph on YouTube. We're here Thursdays, 12 p.m. Let's roll over into our Markets Pro segment today. I know we got some hot tokens that we are tracking, so let's move into our Markets Pro. News is what moves the crypto market. The Newsquake services provided by CT Markets Pro helps traders stay on top of important developments. Newsquakes are automated alerts that instantly notify users when market-moving events happen. Thanks to Markets Pro, we're able to track this in real time. Coinbase listings, Binance listings are typically the kings of newsquakes, and we saw that this week. Danilo, let's pull up the chart for Horizons. We have a very hot chart to show you guys about the newsquakes through the Markets Pro service this week. This one was an absolute, did you guys see the SpaceX rocket go to outer space this week, because that's what Zen did. We saw the newsquake. Look at that bottom circle there on the chart. That's a newsquake, folks. You get those when you subscribe to Markets Pro. On that chart, it alerts you on your phone, on your desktop, whatever it is, you're getting that alert. And then instance later, you can see that price spike with the white line. It's a SpaceX rocket ship. That's what that is. And that's what the newsquakes allow you to do.
Listing, right?
That's exactly right. That was Coinbase Pro listing. And so that price shot up from $88 to $113 within a few hours. And one of the greatest things about the newsquakes is that if you're able to react as quickly as possible, you can react faster. And sometimes these trades, you can miss out on percentages by seconds. So the faster you're able to act on that, the more likelihood you're able to get in on some of these things. So let's pull down that one. Our next token that we're going to highlight this week is Avalanche. So another incredibly useful feature of Markets Pro is the algorithmic metric called Vortex Score. The Vortex Score is a comparison between current market conditions and social conditions of the past. So a high score typically indicates, based on historical data, that the asset's current outlook is bullish for the next 12 to 72 hours. You're looking at this chart. What does all this mean? We got lines, we got bars, we got circles. What is all this stuff? The green and yellow line is going to be that Vortex Score. We see that first circle there is that peak where that Vortex Score hit 80. And so what happened with AVAX here this week is that peaked, the Vortex Score, and we see that white line where it did slump a little bit after that peak of the Vortex Score, but then it had a huge rise after that. So when we saw that score, it shot up from $42 all the way up to $63. So that momentum stalled a little bit after that Vortex Score, but then we saw after the next 48 hours, that price absolutely surged for AVAX. So if you're able to get into a lot of those things with the Markets Pro tool, you're able to see these things in real time, which is super cool. And I know this is stuff that we're highlighting kind of retroactively, but again, if you're not doing Markets Pro, I don't know if you're doing it the right way. So that's going to be our Markets Pro segment for this week, where we highlight some of the hottest coins for you to keep an eye on. I'm super excited for this next segment here. We have a special guest today, and if you haven't liked and subscribed, don't forget to do so, and stay around for the end. We got questions, so make sure you're plugging in those questions in the chat. But we do have a very special guest today, Charlie Burton. So let's go ahead and bring Charlie in. All right, folks, we have Charlie Burton, who is a professional trader with 22 years experience, has been trading full-time since 2002. He only got into trading by chance when a friend invited him to a trading seminar, which he found fascinating. After that, most of what he has learned has been self-taught. He shot to fame when he was featured on BBC's Million by the Minute program back in 2014. Charlie believes there are no such things as natural traders. Everyone has to learn somehow. Charlie, how are we doing today? Thank you for joining us.
Good afternoon. Yeah, thanks for having me on again. So it's been a few months, but yeah, hi guys. I've seen a few of you before. So yeah, thanks so much for having me on.
Yeah, we're super excited to jump into things today.
Yeah, no, far away on the questions. You can see, actually, I can just see myself actually on your screen there, that you can see my top screens are all off, because it's funny. I don't know what questions you're going to ask me yet, but once upon a time, I used to be trading all of the time with all of these screens on, and you see all these traders trading that way, but it must be an age thing, because I'm using fewer and fewer screens as I'm getting older. But we can talk about that as we go forward.
Yeah, definitely. I want to definitely learn a little bit more about like how you got started in trading in particular, and I guess walk us through like how did you get started and what really piqued your interest with things.
Yeah, I mean, I never wanted to be a trader. To start off with, I never meant to be a full-time trader, should I say at least. I was always interested in the markets, but I came from financial services anyway, so I worked for a fund management company here in the UK, and I wasn't a fund manager, but I worked and I used to advise financial advisors on our funds and that sort of stuff. And I'd said to one of my managers at that time that I wanted some more personal development, and he sent me on a Tony Robbins course. You probably heard of Anthony Robbins.
Yeah.
That personal development guru. This is back in the late 90s, 97. I've been trading, what's that, 24 years now. And so I went on that course, and it made me sort of have this sort of thirst for learning and doing different things. Back in 1997, this is all very different, weird stuff for us. And And then I stumbled across a trading course, a course learned by an American company teaching you how to buy stocks, and write covered calls against them. So buying calls and puts and that was, so it was sort of holding positions for a few months at a time, and then maybe writing some covered calls against them and taking a bit of an income off of your stocks that way. So that was my introduction into trading. It was very basic, but so I immediately started trading US stock markets. And I remember back then, just to open up a brokerage account, like you open up a Binance account now, you do it in minutes, and
Right.
It took a month, might have even been 6 weeks, because the amount of forms you'd have to fill in to open up an account in the US, and all the SEC forms and everything used to take so long. And so I would be out on the road a lot of the time, seeing financial advisors and stuff. And so I was swing trading. So I was holding positions for anything from, usually from at least a month, if not, longer, certainly in the first year or so. And I remember I'd be in my car going to meetings, and I'd have my old laptop at the time. And you remember you used to have, you guys probably don't remember, because, you used to have these old Nokia phones, and they used to have the infrared port in them, and you used to have to line up your infrared port to the side of your laptop, and if it didn't quite get up, you wouldn't be able to dial up, and it would take ages to get the laptop cranked up and lined up to the internet, and eventually you get there, and then I'd be able to log in and stuff and see what was going on online. So yes, that was my first introduction into the markets. Went on a trading course, like lots of people do, whether it's online. My one was a physical course, obviously back then. It wasn't online courses back then, but it was a real eye opener. And the irony was, I saw trading as something to do on the side for my actual career, because I loved my career. I had no intention of leaving my career. It just so happened that 4 years later, after starting trading, that times had changed a little bit, and I'd got sick of all the corporate entertaining that I was doing, like 4 days a week out drinking and all sorts of stuff with your clients, and my balance in my life had got a little bit out of kilter. And I had this trading that I'd been doing for 4 years, and I thought, well, I'm not so happy in my career anymore. I don't want to have this unhealthy lifestyle, as fun as it might sound, going out doing all this corporate stuff all the time. So I thought, I'll take a sabbatical, I'll take 12 months out, and I'll see if I can make this transition from being a part-time trader to a full-time trader. And that was back in late 2001. So that's how I got started.
And so how did your appearance on BBC, was that a before and after moment for you? What was that like?
Well, that was in 2014, so I'd already been trading 17 years by then. So, yeah, that was the producer got in touch with me because I was involved in a live trading competition here in London, which I won, by the way, 5 times winner of that. I have to point that out. But yeah, so, and it was the first year I was. It was like a live trade-off, and the producer of the show got in touch and said, look, the BBC are putting this documentary on trading together. They've heard about this live trade-off at this Forex show down in London that you're participating in. Could the producer of the TV program have a chat with you? So I said, yeah, sure, and would it be okay for them to film? Yeah, sure, no problem. So within an hour, this was of me saying yes, the producer of the TV show phoned me up. I had a chat with her, just started talking to her, answering her questions about trading in general and stuff. By the end of about an hour, she said, actually, do you want to be on our TV program? So I said, as one of the people on it. And that was how that came about. It was a result of me doing this. And the irony was that they did come down, they filmed me doing this live trading competition, all of that. And so they did film me here, actually, in this office here, trading. But there was so much. They must have filmed about 2 days worth of me trading here and at the live trade-off. But then most of the content, they edited out, and they put content of me washing my car and training in the gym and stuff like that, because they said, oh, it's a lifestyle show. If we just have too much of you sat in front of your screens, it'll be boring for the average viewer. So they put a bit of that in there, and they had me like going out running and, you know, and washing the car and doing silly stuff like that. So
I see. That's awesome.
Well, you're obviously a really accomplished trader. How do you like incorporate the news and like the more randomness of news announcements? Like we saw the announcement with Litecoin, the fake announcement with Litecoin. It really took the market for a roller coaster. How do you incorporate that into trading?
Well, let me just make this very, very clear. I'm predominantly a Forex trader. When I'm invested, I have investments in Bitcoin and in Ethereum as well. But I'm not short-term trading those. So as far as news is concerned for me and my trading, then it's more about the economic type news releases that come out of the US predominantly, because I'm predominantly trading the dollar. And so that's what's more important to me. So yeah, like most people, I just have the economic news calendar. I consult that at the beginning of the week and each day, just to remind myself what main news might be coming out. And but in the main, I don't day trade as much as I once did. So I more swing trade. I'm in my office every day, but I'm more likely to be putting on positions that I'm going to be trying to hold for, you know, quite a bit longer. So news becomes less important the higher the time frame that you're trading over. If you're an absolute intraday trader and you're trading with leverage, then news becomes really important. But if you're looking to hold positions over a longer time frame, then all the squiggles that go on and the bits of news that are released, which might create all those squiggles in a market, which are really important to a day trader because they might get stopped out of their positions if they've got stop loss levels and stuff, become less important to a swing trader who's going to have, you know, wider stop losses in the market. And so those sorts of things carry less impact for me, but they used to.
Charlie, I want to use your more extensive background, especially on FX markets. So I want to understand your take on the Bart-Simpson formation that happens a lot on Bitcoin and Ethereum. So Bitcoin is trading at that price, and there's a bump. It stays for a couple of days, then it plunges down again, forming the Bart-Simpson. Have you seen that on other markets, and why do you think that happens so much?
I think traditionally you've always seen consolidation periods anyway, and I quite like that sort of pattern actually in the cryptocurrencies and in Bitcoin, like you've just said. And when I've been on before, I've been talking about that very pattern. I think it was just the last time I was on that. I think that part of the reason is that in the cryptocurrencies, it's a younger man's game. Younger than me, probably, for a lot of people. So there's a lot of people who are younger, maybe, you know, a slightly lower, younger generation than me. I'm 48, so we're probably looking at, you know, don't get me wrong, I'm invested in the stuff, and I've got plenty of friends who do, but I still think there's a lot of younger people involved in that. And what comes with youth is emotion. And so one of the things that we all know as experts that markets constantly do is markets, by their very mechanism, pry on people's emotions. It doesn't matter what the market is. That's just natural behavior of the market. It's a living, breathing thing. And a lot of the time, the market's job is to try and, I always say, to try and shake off as many participants as it can. Even if the market's trying to go high, it'll still manage to shake off people one way or another, either through fear of them just getting to a point and they just have to bank their profits, or as we know in flushes and things like that. And again, prying on that emotion and coming back to the types of consolidations you're talking about, where you just get these periods where it just goes flat for a while. I think that one other thing, and an emotion that younger people are more susceptible, is boredom. And so you get people, they get bored out of their trades. I was talking about this when I was last on. And so they're like, oh, I better go and find something else. This Bitcoin's going sideways for the last 2 months. Whereas for me, I love that type of consolidation because, yeah, I'll just use that to get in. And that's what the pros do, get in and then sit there, because they're not necessarily having to use the same leverage. They've not got the same sort of time horizon, and who's someone's younger saying, come on, make me some money today, you know, or this week. Whereas us older guys and the pros can sit there and and ride that out and accumulate when others are getting bored and effectively getting flushed out of their positions that way. So I love those consolidations.
So does having a lower win rate mean lower profits? What are your thoughts on that?
Okay, so yeah, I mean, win rates, I love them because the younger, when I say younger now, I mean the newer the trader out there, whether you're a trader in Forex, stocks, cryptos, doesn't really matter. I find over the years, I've been training traders now for about 15, 16 years. And what I find is that newer traders want high win rates because we want to be right as much as possible. We go through life. We go to school. We're taught, we're educated to be right as much as possible. Pass your exams, get the highest pass mark you can. You go into the working world, and being wrong is seen to be bad. And yet we come to trading, this whole trading universe, and we have to rewire in a way because we have to appreciate that being right isn't as important, and yet it is still important to people who are newer. So they prefer to be right more often. But what I find is that the more mature a trader becomes, they realize their win rate actually slightly comes down, and yet they become more profitable. There's a really interesting survey that was done here in the UK, a big broker. I think it was done with IG Markets, one of the biggest CFD brokers here in the UK. And they looked across something like 40 million trades. And they found that across these 40 million trades, their clients had something like a 60% win rate. And yet those clients were losing money because their losses were so much bigger than their gains. So even though they were right 60% of the time, they were still losing money. So win rate isn't that important. So for me, coming back to your question there, no, having a low win rate can actually be highly profitable. My biggest risk to reward ratio trade in recent years was a 1 to 56. I've had a few in the recent past of well above 1 to 20 risk to reward. So for every $1 you risk, making $20 to $30. You can afford to have a number of losing trades if you have risk to reward ratios like that, and that's what I quite like looking for. So risk to reward is more important to me, or overall profitability to me is more important than just being right or having a high win rate. In fact, my win rate is probably less than 40%.
Do you think that, like you mentioned, the maturity you get over time, do you think that like diversification is something that comes along with the people as you mature as a trader, you get more likely to diversify into different assets? And what's your opinion on just diversification?
Yeah, well, like you've just said, I think from an investment perspective, as you get older, you'll diversify more. So for investments, yes, I diversify. Ironically, from a trading perspective, I actually focus more now than I ever have done on smaller, a narrower range of markets for my day-to-day, week-to-week trading. Then I'm more focused on just trading the dollar than looking and chasing the next big move. Like oil had a great big move yesterday, sort of thing. I'm not jumping on that just because oil's gone up. That's not on my horizon. So I've found that focusing on a few markets has been better for me over the years than trying to spread myself too thinly. But that's from a trading perspective. That's very different to investing. Investing, yes, diversification I think is a good thing. Across cryptos, I think it's a good thing to do. But from a trading perspective, then actually I think focusing on a few markets is better than trying to look at too much.
So Charlie, I've seen that you practice martial arts in the past. Don't know if you currently do it, but do you think that this discipline, this mind focus is important for the trader, and how can regular people improve it?
Yeah, I did karate for 20 years, and I used to compete for England. I fought overseas and stuff. So yeah, I did it from I think I took it up when I was 15 years old, and I had to quit by the time I was about 35 because of back trouble. So I was plagued with back trouble for many years, but I did get to a reasonable level in martial arts. But did it teach me discipline for trading? I would say, actually, controversially, no. Even though it gives you a lot of discipline within martial arts and maybe within other aspects of life, I would say no. But one thing it did give me, I would say the number one thing that martial arts gave me was tenacity and that ability to just pick yourself up after someone's just kicked you around on the floor. And I'd go to training sessions with like world champions, and we'd all just end up in a big scrap. Like a bit of back in those days, a bit like modern day MMA, we'd all be scrapping on the floor by the end of the class, and I'd walk out with black eyes every week and scratched up and all that sort of stuff, and a few breaks here and there. But you were taught to get up. You couldn't stay on the floor. If you could get up, you got up, and they would beat you to see how you reacted. Did you give up and just stay on the floor, or did you get up and try and carry on fighting? And I think it was that sort of mindset that carried me through into trading, because I could have very easily quit trading. In my first year, I took a $40,000 or so account up to $250,000, and then gave it all back again in my very first year of trading. Wow. And I could have so easily quit back then. But again, it was just that DNA in me that, well, you've got to dust yourself off, get up and carry on with the fight. So for me, the martial arts taught me that never quit attitude, really. So that was the main thing. Discipline in trading, as it turns out, I had to learn. So it was just, as a result, I'm a natural greed-based trader. So you've got greed and fear-based traders, and I definitely on the greed-based scale. So I was always going to be that person who would take a bigger trade, oversized positions, do all that sort of stuff, and so I had to learn the hard way to build discipline, and it was as a result actually of that greed that I did it. Because in that first sort of 18 months or so, once I'd got over that initial loss, making the money and then losing it, then I went through this phase where I'd make money for a few months and then give it back very, very quickly within a space of a week or two, and then make money for a few months, give it back again very quickly. And what I was doing is going through this cycle of being disciplined and trading quite well and adhering to my trading rules, then after a few months, getting a bit overconfident, and then thinking, oh, I think I'll trade that, or I'll trade this. And you get overconfident, and then you give your money back, you give your gains back. And I went through that for probably the best part of a year. And it was by going through that cycle that I realized what was going on. It was just that lack of discipline. So that was a big wake-up call for me. And I realized that if I could get on top of my discipline, then I stood a much better chance of breaking out of that pattern of just being up, basically having an account balance, which was overall.
No need for me to get in karate. I just need to keep my rules simple and keep them on track. Don't change them every time. Is that it?
Sorry, what?
So what a trader needs to do to improve is keep the rules simple and obey them. Don't change the rules on every time.
Absolutely. But I mean, I also say, look, we are all fallible. We are human beings. We are absolutely flawed. All of us are. And especially in the front of the markets, we are naturally influenced by greed and fear to one propensity or another. So absolutely, we need to have some simple rules. But I would also say that a lot of visualization is good, and because you can have some rules written down, because I've done that, I've had rules written down and then you sort of discard them and put them to the side. Oh, just this one time I'm going to take this trade. So I think what's important is a lot of self-talk. And if I do this now, if I take this action now, if I take this trade now and it doesn't work out, will I kick myself? That's I've used that for years. It's a great line to just sort of act as an arresting mechanism to stop yourself. For me, being a natural greed-based trader, to stop myself from just jumping into trades which I shouldn't be in, and to stop myself from going off of my rules, and away from my rules. So if I take this trade now and it doesn't work out, will I be upset with myself? And if the answer is yes, you can't take the trade. And it's a case of just a lot more talking to yourself, a bit like if you had a mentor. So if you, Marcel, if you were sat next to a relatively youngish novice-based trader, and they were about to take trades, they would probably, because you're sat there, they probably would have much better discipline than if they were sat there by themselves. So what you need to recreate is that environment as if someone was sat, a mentor was sat next to you. And the only way to do that is to ask yourself questions, because that's exactly what you would be doing. You'd be saying to someone, why are you doing that right now? What's the consequences of you doing that right now? And if people can create that environment for themselves psychologically, then that really helps them with their discipline.
And so you've touched on like the mental part about trading, but I'm also kind of curious to learn more about like the technical aspects. So what are some strategies that you like to deploy when you're trading?
Yeah. Can I share charts or on my screen?
Yeah, definitely. Yeah, definitely. We have a share screen button there.
Okay. Let's see if I can do it. Alrighty. So I want this one. Okay, so you should be able to see my screen. Got a screen up? Yep, I can see that, yeah. So I use a lot of, I'm just going to talk technical analysis here, and I use a lot of multiple time frame analysis as well. I'm a big believer in not just looking at, let's say, a daily chart. I've got a daily chart of Bitcoin up here, but not just looking at a daily chart. I'm going to be looking at the weekly and the monthly as well. So I have that sort of top-down approach. I want to get some alignment within what I'm looking at. But so, for example, at the moment, Bitcoin, I just use a few moving averages and an MACD indicator down the bottom, and price action. But so as we can see on my chart here, Bitcoin came down when it had that flush last week or so ago. Down to the 50-day moving average. It's my black moving average down here. And we can see it's starting to move off of that right now. Now, as far as strategies are concerned, I have so many, and like I said, multiple time frame analysis is important. But for me, a first retest of a key moving average, like a 50-day moving average, is always going to be something I'm interested in. So if I was bullish on this market, and when it's pulled back on that El Salvador day there, then that's going to be a level that I'm going to be looking to buy at. So a first retest of a key moving average, like a 50-day moving average. But I wouldn't do that by itself. Like I said, there would have to be multiple time frame analysis going on as well. But that would be something very, very simple that I look at. If I'm bullish on a market, wait for the retrace. It's not rocket science, and you can either use Fibonacci if you're a Fibonacci person for looking for retracements. I like using moving averages because I find one thing I always say about moving averages is that people just say, "Oh, it's a moving average." Yes, it's an average of price, and people forget that it is price's average, and price likes to retrace to its average price because it's a natural mechanism of price is it likes to mean revert. It likes to revert to the mean. And what better mean is there than an average of price, and therefore a moving average? And something like the 50-period moving average is always been one of my favorites. So I think moving averages are a very graceful way of, if you're looking at charts, of doing some analysis. But it's not moving average crossovers. I'm not interested in that. I'm using moving averages as support and resistance, the angle of them, the number of tests that they may be having. So I do a lot of stuff like that. But the other thing that I will look at, you asked me some ideas. If you look at the MACD here as well, I do like divergences. I use MACD indicator for divergences. Bitcoin was diverging over those few weeks. As you can see, that look at the blue line here, you see that was in decline as price was making new highs. That's always going to give me a little bit of a warning that price obviously could soften. If you see marginal new highs in price, where we've got a high price here, then it pulls back and then only makes another marginal new high before pulling back again, and then the same thing again before it ended up retracing it all in one day there. But there's an even better example earlier this year when I was banking some of my Bitcoin profits from last year. again, you can see this very clear divergence here where price was making marginal new highs here in February through to April. And you can see this divergences coming in on the chart there. So they're just a couple of examples. I can't go into too much detail in the space of an interview, but certainly divergences I quite like, provided it's coupled with maybe some resistance. But what was absolutely fantastic with Bitcoin back in the spring of this year, when it was going and doing those divergences, is, oh my God, the sentiment was so euphoric. And that I had friends who are not traders phoning me up saying, Charlie, I want to get into trading. Can you, I want to buy Bitcoin. What do you think? I want to buy Ethereum. And when you've got your tree surgeon phoning you up saying, I was in the pub last night and my friends telling me I should be buying Bitcoin, you're like, right, that's it, I'm out. And I was joking with him when he phoned me up. He was just one person, and you're thinking, that's it. When they always said in the 1920s, where they said, when your shoe shine boy is giving you stock tip advice, is, you need to get out of the market. And that was a classic from, reminiscence of a stock operator, the famous book. And these days, it's when your mate has been down the pub and they're asking about buying Ethereum, then you might want to be worried a bit. So for the average guy who's got no interest at all in the markets and starts hearing about it, that's when I get concerned. So back in the spring of this year, it just felt so euphoric. I'm sure you guys felt the same way. That gave me that sort of warning sign. I thought, I've got to bank some profit because. At that time. So sentiment is a big thing for me. Sentiment.
Do you have a current sentiment towards Bitcoin or outlook on Bitcoin in the market?
Yeah, absolutely. Yeah, I mean, I try and tap into it, just using like Twitter feeds and and picking up on general news. So I use various financial sites. So yeah, I'll try and tap in. A great one is when Goldman Sachs starts talking about any market, and you think they start getting really bullish on something, then again I use that as a warning sign. If the big banks are starting to talk about a market going much higher or much lower, then I'll usually look for reasons why it might do the opposite. So yeah, absolutely, sentiment is key for me, because I think that it's that old adage that if everybody's in, who's left to buy? But if you've got a bull market whereby people are pessimistic, a bit like the stock markets over this past year, there's quite a lot of pessimism actually, because everyone's looking for that stock market crash. When's the S&P and the Dow going to crash? And yet they don't. They have a short pullback and then up they go again. And of course, at some point they will crash. But when the masses are still pessimistic, at least the fuel is there that they might at some point throw the towel in and say, right, I better get on board because this thing's still going higher. There's still at least pent up potential demand. But if everybody's in and everybody's euphoric, that's the recipe, as we know, for a crash. And so and I felt that was the case in Bitcoin earlier this year. But funnily enough, I don't feel that right now. I don't know what you guys are picking up on, but from a sentiment perspective, you guys are much more tapped into the crypto community. But certainly I'm not. My tree surgeon hasn't phoned me up for a while, so I think we're safe for a while.
Excellent points. And we appreciate your insights today. This is Charlie Burton, a professional trader. He was giving us some of the great strategies to look at when we're looking at charts, some of those simple tips. And we appreciate you jumping on today's show and walking us through your story and what you like to do when you're looking at markets and charts in particular. So thank you for joining us today, Charlie.
Thanks for having me on.
Excellent. We look forward to hopefully having Charlie back again in the future. And this is going to bring us to our question and answer segment. But first, if you haven't liked and subscribed, please go ahead and do so. For Thursdays, 12 p.m., we're here, The Market Report. Make sure you are tuning in. So let's jump right over into our question and answer segment. Time to ask us anything you got regarding the markets, crypto, anything goes. Let's go ahead and get right into it, guys. All right. So our first question today is, Surprise, surprise. Cardano question. Why is ADA going to go down? And this year, ADA crossed $5. Marcel, what say you about Cardano?
Well, Benton, you know me. I rather wait for a project to show concrete signs that it can deliver before making an investment decision. It doesn't need to reach a $100 billion TVL, total value locked on the smart contracts. But it got to reach $1 billion, the first billion, show, okay, the DEX is working. Okay, the yield farming is working. Okay, the NFT markets are working. So you got to have something concrete so you can analyze. Because if it's just a white paper, if it's just an opinion of an expert, of a promise of developers, don't do it. It's hype.
Jordan, what do you got?
Logical. You're going too logical, Marcel. These people love Cardano. It's cult following. I'm telling you, even if I don't care if they didn't launch smart contracts the other day, it would still probably go to $5. That's the cult following, man. But yeah, like it's going down. Markets, yeah, buy the rumor, sell the news. I do think it will eventually go up, potentially $5 to $10 this year. I'm not going to keep holding it through that. You know, I do think we're going to have another bear market here within the next year or so. But yeah, cult following, dude. Cardano. The fact that we talk about it like every week shows you how much it's on people's minds.
Cardano to $5. I see it happening. It's inevitable. It's going to happen. It's just going to take time. We have another question here. How long can BTC and ETH? How low can BTC and ETH get before the bull run begins towards 100K, or is it only upwards from now? Jordan, what do you think here? Hot takes, BTC and ETH.
How low can? I don't think they're going to go much lower until we get another blow off top. I think we'll see an all-time high before we see like really lower prices from here. But that's just my current read on the market. There could be a lot of different things. Marcel's over here shaking his head like, "You're wrong, Jordan."
Marcel, jump in here, man.
But Jordan, even you said earlier in the beginning of the show, regulation is going to come to cryptos, and when that comes out, the initial reaction is going to be bearish. It's going to be negative. So after we have this regulation after this first couple of months that people adapt, understand, change what they need to change, then we're going to go up. So
regulations in crypto are like smart contracts on Cardano, man. They ain't coming anytime soon. Regulations.
They just regulated Uniswap. Uniswap had to delist on their front page on their website some tokens.
Did they pass a regulation, or did they say they were looking at it? There's a difference between looking at it and actually going through Senate and the House of Representatives and then passing a bill, which we have not done well for years in this country. So like that ain't gonna be like really split. This is done, man.
Not to mention there was something proposed to hit around 2023 where every bank account with $600 or more can now be monitored. You know, that's something again in the works, hasn't been passed. It's been talked about. Like, what are the impacts of that with crypto? So I think, you know, we're gonna go below this 50K. We're going to stay in this range here until we get back up to, higher highs, until we get to that 100K. It's going to take a lot of different events, I think, to get there. I think the floor right now, we're talking probably, year over year, we saw Bitcoin at 10K last year. I wouldn't be surprised if we drop all the way down to 20 at some point when there's this blow off top. Hopefully it's not soon, but it's possible. It's possible. So we have one more question here, and then we will wrap things up. It says layer 2 on Ethereum network is the future, in my opinion. They build on Ethereum infrastructure. I don't know if that's necessarily a question, but what are your thoughts on this? The layer 2 on Ethereum, I think we touched on this earlier. Is this the ultimate solution for what Ethereum needs?
I don't understand why that's like a good thing for Ethereum. Like, I need this other thing. Like, we're the future of this network, but we're not that network. We're a different protocol. What is that good for Ethereum? That's not a good look. Like, why does Ethereum need that to be its future? Why can't Ethereum be the future? That's the problem here, in my opinion.
I don't think you can solve the world's problem in a single network. It can't be done. You cannot handle microtransactions and at the same time handle trillions and billions of dollars of smart contracts. So I do think that there will be a solution designed for each necessity. So yeah, Ethereum can have a large space over there on smart contracts and DeFi, but it's not going to be the only one. No way.
Yeah, I'd have to agree with that. You got like our Algorand is really building out its portfolio to be able to host central bank digital currencies or other stable coins. You got enterprise-focused solutions. You got Ethereum as a DeFi platform. You got other platforms that can handle NFTs better. So yeah, I think that each platform would be better if they like focus on a specific niche and really help maximize their capabilities in that regard.
There's going to be a conglomerate of chains, especially in the DeFi space. I don't think it's just going to be one solution fits all. Last question here, and then we will wrap things up for today. What do you think the price of ETH will be by the end of 2021? Marcel, stars off.
I don't think that ETF is going to be approved by year end. I'm waiting for February, March, April. So in that case, if the Bitcoin ETF is not yet approved, I think that 4.2 thousand is a good year-end target for Ethereum.
Jordan.
Yeah, I was going to say something like that, 4,000, 5,000. But again, there's also a possibility that like it goes up and then something happens and the market goes down. Like you're talking about December 31st, 2021. Like we could have gone up to like 6,000 Ethereum and then like we ban all cryptos and we're getting rid of the internet. And like, I don't know. We'll see what happens, man.
I'm saying 3,000. 3,000 ETH feels like a nice little comfy zone. It's a little bit below, a little bit on the low side, but I think it's a conservative price point for an average price level to look at by the end of the year, barring any major bullishness in the market. So we'll see. That is my hot take for Ethereum price. We appreciate everyone asking their questions. We're really doing this every week, so make sure you pile up those questions for next week. In today's show, that's going to wrap things up. We appreciate everyone joining us. If you haven't liked and subscribed, do so. We're on YouTube. We're here. Like and subscribe every Thursday, 12 p.m. We appreciate every one of you for joining. And until next time, over and out. This has been the Market Report.